Hello, this is Adam Friedenberg. I'm with Top Line Valuation Group, and I wanted to just provide a brief overview of a new product that we are putting out to a lot of companies in the ARM industry. We like to call it our Strategic Valuation Assessment, or SVA. And so over the next couple slides, I will walk you through components of the SVA and how companies are using this for their further purposes. We start this out with an overview of the assignment, and this tends to be just a general description of the company, where they're from, any shareholder ownership, and a couple graphs about the types of debt that they service, the types of placements, the industries that they operate in. Our next section segues into industry assessment, and I consider this one of two parts. Provide an industry assessment of the ARM industry in general, where we see it today, where we see it going. Our next section details further into the industries of the types of debt that this agency operates in. So for example, I just did an SVA for a company that was focused in the medical industry. So we would go further into that, into what makes up that industry, where we see it today and where we see it going, and how it relates to the company. Our next section goes right into the financial statement review of the specific company. This includes obviously your financial statement assessment and review, and also goes into graphs regarding ratios, maybe common size trend analysis, and also providing detail about any normalizing adjustments that we would make to that company. So here we're looking at just a high-level review of an income statement, as well as, it calculates all the way down to our normalized net income and normalized EBITDA. You can see at the top row, we are showing our actual and historical years, also those years with a P next to them. For this example, we've actually projected out using management's assumptions for the next 4 years. Next slide is a high-level balance sheet. With these slides, I may go into further detail to talk about what comprises up the total current assets, what comprises up total current liabilities, total non-current liabilities. I may talk about any cash distributions that are made to shareholders, anything that I can dive deeper into to provide value into what makes up this client's financial position. Our next slide is what I previously mentioned regarding normalizing adjustments to a company's EBITDA or operating net income, or any cash flow metric that we decide is best for this company. Here are examples of some general normalizing adjustments that you'll see. You're taking out your total owner's comp and adding back a reasonable replacement comp. And a lot of companies may have some owner's discretionary expenses, any meals, travel, and entertainment. The graph towards the bottom of this slide just provides more detail into what this normalizing adjustment is, where we may have come up with a replacement salary, and how we're kind of coming up with how these normalizing adjustments were found or calculated. The next couple slides may show some historical and projected graphs of net income margins, of EBITDA margins. It may go into showing ratios, whether it be leverage ratios or liquidity ratios. In this example, you're obviously looking at your normalized net income margin and your normalized EBITDA margin across the span of both the actual and projected years. Here's two graphs across both historical and projected years showing just two ratios: your ROA, your return on assets, and your D to E, your debt to equity. In a lot of cases, when you're doing these valuation assessments, a hypothetical buyer is going to want a certain working capital requirement left in the business. It's very normal. So what we try to do here is come up with kind of a hypothetical, we can call it estimated working capital and net debt adjustment. And you can see here's how we've calculated this just for our actual and historical years. Moving right along, we kind of get into what the owners obviously want to see, and that's what is my company worth. Here we've kind of chosen an enterprise value basis. Two graphs to start out, just kind of a cover sheet or executive summary, just showing graphically actual through projected years of revenue performance trends and also normalized EBITDA performance trends. Okay, so here is what we're looking at. In this example, we've chosen 5 methods to use to come up with some kind of indication or preliminary value of the company. The first 3, your discounted cash flow, exit EBITDA multiple, and capitalization of earnings, tend to use more client-specific data as well as a custom-built, discount rate or capitalization rate using guidance published by firms that produce different risk premiums for valuing privately held companies versus a publicly traded company in a specific industry. Your bottom 2, your industry benchmark and comparable transactions, what we are tending to do here is coming up with either using an industry experts assessment or a database that publishes 100% sales of privately held companies to come up with you can call it a sanity check multiple to apply to company specific data to come up with a general kind of range. I like to use these 2 ranges not so much to pinpoint a company's value exactly to, but to kind of come up with a sanity check or something to justify my use of the top 3 methods when I'm using more of my company specific data. We conclude the SVAs with what we call shareholder business recommendations. And so what you're going to see on the next slide are high-level recommendations, both value drivers and value detractors that come from us, that come from Top Line Valuation Group, and it's a result of management discussions, looking at all of the qualitative and quantitative data provided by the company to help the shareholder or shareholders in one of 2 ways. The first way being, if the company is already at the negotiating table, they can kind of use these to help negotiate and to help guide, not so much disclose to the buyer side, but to use and help negotiating price. The last way is more of a kind of a consulting advisory type base where, hey, today we see your business as being here, but looking at some of these, we can kind of help guide you to get that business to the next level to kind of reach a price where the owners want to exit at. And so in this example, you'll see your value drivers, your value detractors, and some high level recommendations that we've given. So that concludes my general overview of the SVA product. Once again, I'm Adam Friedenberg with Top Line Valuation Group. Please feel free to call me if you have any questions regarding what we've been through today. Thank you very much.